The major U.S. stock averages got a strong boost for the first quarter of 2019. But when we look at the precious metals space, gold gained a little over 1% for the quarter. So we'll take a look at the precious metals space as well as the overall stock market. Joining me on the trading floor of the New York Stock Exchange is Albert Liu. He's the portfolio manager of Sprott Asset Management as well as president of Sprott Media. Albert, great to have you here today.
Thanks, Remy. Great to be here.
Well, here we are on the first day of the new quarter for Q2, and already we're seeing the major equity averages gain straight out of the gate. But when we take a look at the various sectors, we're seeing a lot of interesting patterns. So what do you think strikes you the most, and what should investors pay attention to?
Well, Q1 was phenomenal, obviously. We finished risk on big moves in all three domestic equity indexes. Today, we're up on the Dow over 200 points. It is April Fool's Day, and Elon Musk did drop a new rap track. So I'm taking all of my observations with a grain of salt here. But to be serious, I think that we got some good news over the weekend. Last quarter, we were coming off a pretty big correction, which explains why we had such a violent move up. And China is in focus now. We got great news in terms of trade. So extensions, right, of the ceasefire. We have interesting manufacturing news coming out of China overnight. Question is that going to continue? So I'm going to be watching to see if that's an outlying data point or if that is the beginning of a series of data points we're going to get that indicate a recovery. I actually think it's the former. Right now, the market's all excited about this, and the market is also ignoring the fact that we have sort of a Brexit decision date coming up in 11 days. People seem to be assuming that, at least outside of the currency market, people seem to be assuming that that's not going to be a problem. So definitely have to watch that too.
I think we do have to continue to keep an eye on the global fundamentals and how they affect the broader market. But I do want to shift our focus on over to precious metals. Now, I know you pay attention to the junior companies, and the major companies have been in focus as of late, especially given the major mergers that we saw. But what strikes you the most, especially given where gold prices are trading right now?
Right, so you mentioned in the intro that gold is up slightly. Gold is doing what it's supposed to do. It's not supposed to rip 10, 15% in a quarter. It's supposed to steady the portfolio, and that's the way we look at it. There is a lot going on in the mining industry. That's something that I pay attention to, but I'm far from an expert in that area. I'll defer to other people on that. But for me, gold is doing exactly what it should in a portfolio. And one of our mutual friends, James Rickards, will tell you that of all the billionaire hedge fund managers he knows, every single one of them has a substantial allocation to gold. We can quote him on that because it's in his upcoming book. From my own personal experience, when I was in retail gold sales, some of my best clients were big money managers who bought bullion from themselves, for themselves. They couldn't necessarily purchase it for their clients because, for many reasons, but when it came to their own personal wealth, yes, they understood gold. People who are sophisticated investors, more and more, not only do they understand gold, but they're willing to talk about it. So I think that with the Fed cycle turning from hiking to cutting, that's definitely optimistic for gold. I would expect to see some big moves down the road, but that's not why I'm holding it. Definitely, I'm holding it for what it's doing, which is safeguarding the portfolio.
Albert, taking a step back, while we're in the precious metal space, so we did see record highs for palladium in the latest quarter, and that has to do more about supply concerns for that industrial metal. And this morning, we saw Saudi's Aramco in the spotlight as the most profitable company, and it's quite amazing because they surpassed the profitability of Apple, Alphabet, Amazon. And because you mentioned Elon Musk, we know that Tesla is always on your radar as well. But when we take a look at different industries, sectors, as well as individual companies, what are you paying attention to as we head into this quarter?
Well, I think that, the big tech companies, the Apples and Googles and Facebook, they've definitely benefited by the passive index-style investing, the focus on cap-weighted indexes. And it'll be interesting to see, because you mentioned Saudi, is the attention going to focus away from these tech stocks and onto other things, different businesses, maybe leadership from other sectors. So that is very interesting. passive investing has done very well for people for a long time, but all things end. I mean, this is, even though it's become very popular and it's very credible in many ways, the fact that it's cap weighted and the fact that everyone is doing it is sort of an alarm for me. Because even a good idea, if everyone gets on it and drives prices up, it becomes a not so good idea. And that's definitely what we've seen with FANG. That's definitely what we've seen with cap-weighted stocks. So I'll be watching that. And, I'll be interested to see when and with how much enthusiasm the retail market goes back and embraces active portfolio management. Hopefully it'll be before the big turn where these stocks and these indexes crash as hard as they went up, because I think that's what's going to happen. But I'll be interested to see when that happens.
And as you mentioned, if everybody's running to one sector of the market or one type of instrument, that does raise concerns about risk. When we get that correction in the stock market, that could be very concerning to a lot of regular retail investors. So what's your advice to Americans on Main Street, especially during this time of year?
Right. So let's not get overly enthusiastic, about what's happened in the last quarter. Keep in mind that came off a pretty major correction, and people have short memories when it comes to that, but you should remember what happened before. And then the gains we're seeing now, I think, again, I would be cautious. This is based on information, very preliminary information we have coming about the Chinese economy. Who knows whether that'll stick? So let's not try to time the market. Let's not get over enthusiastic. Let's stick with the plan. And I think that is, for most people, the best way to proceed.
Okay, Albert. Well, thank you so much for joining me here on the trading floor of the New York Stock Exchange, and thanks for all your insights.
Thanks very much, Remy.